Hey traders, what's going on? Jamie Saettele here. It is March 26, 2021, and welcome to the end of week Power Hour, where I will be going through a lot of FX majors, we'll look at some commodities, and I'll take questions. Last week we had a bunch of questions on crypto. Let's see if we can get any other questions maybe on FX this week. There's some very interesting opportunities, I think, in yen crosses. Always, we'll look at the dollar majors, but some very interesting opportunities in yen crosses, notably Aussie yen. So we will get to that. All right, let me work on the screen here and see what we can do. Let's see here. All right. All right, so can everybody see the screen? We should be good. Okay, great. All right, so I'm actually going to start with some seasonality charts. We haven't looked at seasonality charts, I don't think, yet in these webinars that I've been doing with Scandinavian capital markets. But seasonal tendencies is just one tool, right? One of many in the toolbox. The way I look at markets is it's kind of a weight of evidence approach, if you will. Obviously, price pattern, etc., is the most important. But seasonal tendencies are a thing with currencies, and I, put a good deal of, weight on that information. So we've had, as I've been a dollar bull, essentially since the calendar turned to 2021, and we have had a pretty good run, right? And as you can see, this is DXY seasonality. So this is the red line here is 30 years of data. Essentially, it's just how the dollar tends to trade over, the calendar year over the last 30 years. So you can see here that the seasonal strength period essentially ends this week. Okay, you go through March, and April tends to be a pretty bad month for the US dollar. And, again, that's just a tendency. That does not mean that the dollar is going to tank. None of this means anything. It just means that the dollar has tended to decline in April. So I thought that was interesting. So it's nice to have that seasonal wind at your back. All right. So keep this in mind as we look at some of these other price pattern and sentiment indicators. And moving along to that, sentiment indicators. I talked a bit about this last week, but one of my, go-to, again, tools in the toolbox is just go to Google, type in US dollar, or you can do this for really any asset, and see what the headlines are that come up. If you were to do this back, say early in the year, you'd have it. When I write my updates, I will throw in, interesting headlines that come across and really take a contrarian approach to them. My book, Sentiment in the Forex Market, I wrote, at this point it was like 12 years ago, but talked about how to use headlines to, have an opinion on the direction of a certain market. There's certain words that you look for. Predictions within headlines are the best to fade, and we actually have one of those here, down here. I'll get to that, but look how different these headlines are compared to what we had early in the year, right? Why? So this is just from 20 hours ago from Market Watch. Why the US dollar continues to rise, defying a 2021 consensus trade. Boom, there you go. Okay, well, yes, it was a 2021 consensus trade, which is exactly why it did not decline in the first place, right? The US dollar has rallied. So we're getting to that point now, that psychological, pivot potentially near term, and you're seeing the dollar actually come off today, and we'll look at the charts here in a bit. Okay, let's continue to look at some of these headlines. This is from investing.com. A stronger US dollar will crush the reflation trade. Well, I've got news for you. The reflation trade in some spots has been crushed for a while. Have you seen what gold and silver have been doing since last August? Have you seen what happened to oil over the last, week and a half? Have you seen what's happened to, Chinese equities, right? Look at EEM or FXI. Those are the ETFs for emerging markets, which China's a big part of, and FXI have gotten absolutely destroyed. Okay, so yes, the reflation trade has been crushed as the dollar has rallied, right? This is a prediction. They're predicting something that already happened, right? DailyFX, place I used to work actually, has King Dollar returned. I don't think DailyFX was talking about King Dollar back in January, right? It would not have been popular to do so, right? But now we are talking about King Dollar. The mere fact that King Dollar has entered the lexicon once again or indicates to me that the easy part of this dollar long trade is over. All right, so let's look at the dollar. Okay. All right, here is a US dollar. Again, my favorite index to look at. US dollar chart, and we have this is right here. What is going on here? Okay, here we go. I got it. So we have a retrace here, right, from the entire rally from March to February, March 2020 to February 2021. You see this low here, September 1st. We've reached that. In my updates, I've talked about how that level is probably what I call a decision point, and that's a great way to think about markets, by the way. Trade from decision point to decision point. Well, we've reached that so-called decision point, right? Strength up to that level, the easy part, we've reached that level. It's also, by the way, we just yesterday, I think, missed it by a couple ticks, but it's the 23.6 retrace of the decline from March 2020. 23.6 is actually a fib. Many people don't pay attention to that fib, but you should. Goes 23.6, 38.2, 618, 786. 50% is not a fib. It's just midpoint between 38.2 and 61.8. But 23.6 is the first one. Okay. If you wanted to even go another one, you can go 14.6. So in any case, still constructive on the dollar, but over the next couple of days could certainly pull back some. And in fact, you see the center line here, the median line, that is where you want to look for support once we pull back. So let's zoom in a little bit here. Let's go to a 4-hour chart. So this is zoomed in, but with the same lines, levels, etc. You can see here that we've got that center line. That is where we want support. And if we throw a channel up on this from the February low, guess what? We would intersect that, say, early next week. It would be early next week. So if for some reason we have a surprise, maybe drop over the weekend, again, I'm just thinking out loud. None of these are predictions, but they are, things to be aware of. If you had an early week drop, you'd probably be wanting to look for support at that level. Okay. Now, eventually, the big level for resistance in the dollar, where I'd really, probably want to actually turn dollar bearish again, if we got there, would be up here about 12,030 or so. All right. That's going to be a parallel that you can see had been precise support and resistance since last summer, last June. Okay. So again, those are the key levels. Essentially, if you're sitting at home right now or in your office, your levels to watch here are 11, 8, 10 or so, and 12,030. All right. Okay. Let's look at euro. Okay, let me see here. Let's do something real quick. Close this out. There's your volume charts here. I'm seeing if we're getting any volume reversals here late in the day, and we're not. Okay, So here's a nice, beautiful, simple chart. Euro, right down here, trend line back from March last year, 1630 or so. You know, increases slightly each day. That's where I would probably want to be turning bullish on euro again. Okay. Aside from being that trend line, you've got the lower parallel down here. You've got essentially the base of the former fourth wave low. Let's just call it former support, which it was. So we'd look for support there again. This little bounce that we're getting today, obviously not much to write home about, but two levels to watch for resistance. I'm thinking it's probably going to be up around here, which is the center line. That's going to be, call it 1830 to 1850, depending on you know, how quickly you get there. If we look at it from a wave count standpoint, just from here, right? 1, 2, 3, maybe a little 4, 5. See where that 38.2 is. 38.2 is right at 1830, so that would make sense. So get a little bounce up in here into 1830 or so. Come back down 1640, those two levels. So you know, got a couple ideas here. One, short a little bounce, and then two, look to turn bullish and flip down here. And by the way, when I say things like that, when I'm like, you know, you want to look to turn bullish down here, it doesn't mean just set an order to go long at 1650 and call it a day, right? I've had these levels marked for, you know, things to possibly do, right? I want to see evidence of support at that level, or even here, right? I want to see evidence of resistance at this level. Okay, something like this where I'm trading with the underlying trend, I'm more likely to leave an order just to short 1840, 1845, whatever, right? Put a stop, say, above 1870 or so, because that would be, you know, negate the 4-5 wave drop if we overlapped with wave 1, right? In that case, you're putting a relatively tight stop, you know, with a high reward to risk ratio. But, you know, down here, looking for a low is a bigger call, if you will. Okay, let's go to cable. All right. Pretty simple here for cable. Trend line from March of last year, right? And then off the November low, support, support. 3880. 3880 is going to be resistance. That's probably where you want to be looking. For a possible short. Okay, that's that simple. I actually had a small long on yesterday. Got lucky. My stop was missed by a pip. I had to stop at 36.69, and I got out too early. So kind of a bummer, but 38.80 would be possible resistance there, and support. I don't know, that low there from February. Kind of wanted to tag there because that would be very close to 2 legs down at 35.40. But if we break back above 38.80, you'd have to go with upside. Cable's in a very interesting spot, by the way, on a longer term basis. So like, if I throw up this weekly chart, let's see here, the 2007, 2014 line, you know, that first go at it failed pretty hard, right? But if we break above that, man, that's a huge, huge break if we get something like that. So, you know, as I always say, resistance is resistance until broken. Support is support until broken. And to this point, we have held resistance, okay? That big spike above it with a big bearish looking candle. Right, that does leave something of a kind of a bearish look on this longer term basis. However, a break above changes that and completely flips the script. So be aware that cable, if it breaks up through this level, let's call it like 140.20 or so, could be off to the races. All right. Dollar yen has hit some spots here. I've been looking for dollar yen to trade a little bit lower. But we're now breaking above this trend line. Let's see if go off of this high instead. So we can get a wave count here. 1, 2, 3, 4, 5. So that's 1, 2, 3, 4, 5. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, something like that. Obviously, we've hit a huge level here. That's the June high. Let's see if we have any fib measurements. So nothing there until 110.80. I talked earlier actually about the fib measurements, right? The various fibs. Dollar yen here, you're going to see these on display right here. So check this out. All right, so 786. Okay, so here was that 23.6 fib, right? So March 2020 high to January 2021 low. 23.6, you know, lines up well with former pivots, right? It's just a kind of a good dividing line. 38.2, beautiful, right? Came up, resistance, pull back, go through, you go to the next one. 618 actually did nothing. 786 though, look at that. That's right where we are. It's also obviously in line with that June high that I mentioned. So you do have a big spot up here for dollar yen. I don't know. I'll need, if I wanted to try to short this, again, a level's a level, so be it. But I would need something like a decent volume reversal, which we could get. So this, here, I'll show you this. So these are my volume reversal signals on a 4-hour chart. I look at 4-hour signals, sometimes hourly signals, but usually 4 hours about the lowest I'll go. And by the way, these are yen futures, not spot dollar yen, so it's going to look a little different because it is the opposite. But let's see here. All right, so what I'm looking for here are 2-bar reversals, okay? A 2-bar reversal means that the market in question, in this case yen futures, trades into a price extreme. So, you know, giving it like a 100-bar price extreme, which is close to a month on a 240-minute chart. It's got to trade that direction on high volume, and then the immediately following that, you know, bar, it has to be in the opposite direction on high volume. So in this case, you'd have a high bar down volume, right, followed by high bar up volume.
That's on yen futures. So on dollar yen, that would be high bar up followed by high bar down. So we're going to get that right now. So it's possible that we just saw a turn in dollar yen. Okay, you can see some of the other signals that we saw here for buys. June of 2020. That's where we just tagged over here. So again, the signal itself is not a blind system. I'm not just trying to turn on the system and sell the red bar and buy the blue bar, but when the signal lines up with a lines up with a level, right, and analysis and a pattern and all that, and you have all the weight of evidence, so there's that term again, all lines up, then you've got a trade. So in this case, coming into next week, I'm not doing anything right now on a Friday, but we could come in next week and be looking to sell dollar yen because, again, we took out this or traded into this level and they're coming off, and we would have a 4-hour signal here. So there's a little example, kind of me looking at a possible trade in real time. All right, let's go into Aussie here. Okay, Aussie, decent setup. Real simple. Something of a head and shoulders top, right? Bounced right off the low, which is a good place to bounce, as we kind of suspected would happen. And neckline up here is going to be 76.60, okay, which is a nice little level anyway. You can look at that right there, bang, bang, bong. All right, 76.60 is a level to look for resistance. Okay, now we just looked at dollar yen, which is a possible short, just given the level that we've hit, and we just looked at Aussie dollar, which, another 30 pips or so, and we're going to have Aussie at resistance and a sell there, or a possible sell, I should say. Well, let's look at Aussie yen, right? Because that would be one heck of an idea if you have those two. All right, so here we have Aussie yen. The underside of this chart from 2008, we did not quite get there. Okay, this is log scale, by the way. We didn't quite get there. However, look at from November, trend line. We're trading right there right now. So, if we got a little more strength and took out this high here after having cut, after having what seems to be a rollover, 86, man, that would be great. I don't think you're going to get there based on, Aussie resistance at, again, 76.60 and dollar yen trying to roll over here. But this is a trade idea that I love. Whether we top out here or whether we try to get up into 84.40, right? Kind of see the topping scenario here going on. It could be a consolidation top. But this is Aussie yen is one to pay attention to because you could have a big drop considering the level that we've traded up into. Okay, and so that brings me to a point where I want to make a little announcement real fast, and I will do so here. Hold on for a second. All right, so as you know, or should know, I am working with Scandinavian Capital Markets as the Chief Technical Strategist. We're based in Stockholm. Scandinavian Markets is a market maker,
And we are looking for profitable traders to join our ranks. We have clients all over the globe that are looking for more strategies to invest in. So if you are a profitable trader and you would like to get into the money manager world, you know, all goes according to plan and things go well, you can get your, you know, you can get your strategy funded with up to $2 million. Okay. So come and show us your skills. To register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. All right. And now we will resume our market webinar. Okay. So we went into Aussie yen. So let's continue. We'll go to Kiwi here first. Okay, Kiwi has gotten brutalized really since the February high. And on a longer term basis, this is a very bullish setup. Like, okay, you can have, you know, see the kind of shoulder, head, shoulder, right? Sorry, this is really sloppy, but art was never my strong suit. So you've got this huge head and shoulders breakout. You see the blue line here. I had that connecting the highs here from December 2019, actually, and September 2020. And right here, okay, that's the neckline. So this drop, while big, again, know your time frame, is simply nothing more than potentially just a retest of that massive breakout. So I've got, you know, on a shorter term basis, still want to be selling here. So I've got resistance probably up around 70.50. All right, you can see the line here. That's this line. It's former resistance, turn support, watch for it to provide resistance again. And again, this is a great example of, you know, people say, I use trend lines or whatever, right? So trend lines to me includes pitchforks, channels. You're just looking for the angle. That's it, right? A lot of people would probably delete this trend line after maybe over here. Don't do that. It's still in play. It's still, obviously the market knows this trend line. When I see something like this, I say, I didn't draw this trend line, the market drew this trend line, right? So that's 70.50. And then on the downside, two levels to pay attention to really, 69, which is two legs down. But again, the really important one, I think, is this blue line, which is like 68.30. So, you know, you've got clean levels to pay attention to here. It's a lot like euro dollar, where, you know, we want to sell maybe a little higher, right? Sell slightly higher. But once we get down into, you know, 68.30, really want to be paying attention for a possible, you know, more important reversal to the upside. All right, let's take a look at, I want to see where the channel is on this, if we have one at least, because that would make things even more interesting. Okay, so we do have something here. So this is great. So trade up here, it's also the center line of this channel. And then down in here. So, you know, boom, boom. All right. Yeah, great trading opportunities right now with the way these charts are setting up for active traders. Okay. Let's go to dollar CAD. This whole thing is dominated by the shift fork that goes back to the March high from last year. Again, lower parallels nailing everything. The center line, actually I have a small long here right now. The center line is where we should expect to encounter some resistance. That's going to be about 26.50 right now. You can see I have this bullish fork drawn. It's actually not confirmed yet because we haven't tagged the center line. However, I still have it up there because we've been riding along for the last week or so. We've been riding along the 25 line here for support. You can see here, here, here. Just now, this was like, you know, this morning. So this is worth keeping on there for now, right? And really, this is one of those opportunities or instances where you can have a really tight stop because the market shouldn't trade under this line here. You can see this line, right there. It's the halfway point between the lower parallel and the center line. Market continues to respect it. It's like we didn't know this until here, right? That would have been on Tuesday. Well, came back and did it again the next day. Came back and did it again the next day. Came back and did it again today, right? So it continues to hold support. There's something there. The market's saying there's something there, something worth paying attention to. In CAD yen is another interesting yen cross to look at, right? Question here, do you ever use trend lines? Yes, so again, I view pitchforks, channels, they're all trend lines, okay? So here, like for example, the question here from the trader, do I ever use trend lines? Well, these are trend lines, right? This is a trend line right here. This is a channel. This is CAD yen. It starts with just a trend line. And then you have parallels that extend, right, from the high pivot. That gives you a channel that becomes resistance, right? So yes, I do use trend lines. You're looking at them right here. This is a trend line right here, back to 2018, which you can see we broke above here in February, right? Recently, like a month and a half ago, and shot to that upper parallel. All right, so I've gone over the FX majors. Let's take a look at some commodities. Silver is a great chart right now. Here's a daily chart, 200-day average, tagged it yesterday. First time we've hit a 200-day average on silver since May of last year. And these levels are clean as can be. We're looking up towards 26 in silver. All right. Simply a trend line, right? Back from the February high. You can see the high over here from November. There's also support here in February 4th. And if we get there, that's the next decision point. We're going to look for resistance at that level. Okay. Now, if you break above it, silver might be a big bull again. But until then, resistance is resistance until broken. Here is gold, spot gold. Trend line. This is the 2020 trend line, or sorry, 2021 trend line. And we are trying to break above. We've been testing that level for a week and 2 days actually, and we are trying to break above it. If you do, you're not out of the woods necessarily. You've got the former low over here, and that's at 1765. All right, that's a level to keep in mind for potential resistance, especially because where you're coming from on the pitchfork, you can see here is the 75 line. You see this gray line? The opposite level of that is the 25 line, and you tend to we have, symmetry. You can see that the market has been trading on these parallels. You can see that support, right, bounce, support, bounce, support, bounce, support, bounce, break back to the median line, resistance, support, bounce, back above the median line, support, right? Now you're looking back to this parallel, and then you'd look for a drop. So you can see how well the market trades on these parallels. Gold, by the way, trades very well technically. It's the most technical market there is. There's no fundamentals in gold. It's pure supply demand, right? All right, let's look at crude real fast. So here I'm guessing that we have a five waves down, and I would call this a truncated fifth wave. So we are well into our five-wave or three-wave corrective. And these, you can see the 38.2 and the 61.8 match up really well. So back already 61.30. I'd be looking at 63.80 for resistance here in crude. So, something like this, you have an A wave up, probably most of it, something like this, maybe a little bit more, then a B wave drop, and then a C wave rally. And finally, for the last commodity, and then we'll see if we have any questions, we're going to look at copper. So copper, this is the trend line back from March of last year. And the black average here is a 50-day average. So that level going to be about 390, and that's huge. So if you break that, big behavior change for copper. If you hold above it, it's, steady as she goes. However, I will note, we'll put this in red because it's important. Look at this trend line in copper back to 2001. Okay, off of the financial crisis low in December of 08. The real financial crisis low, by the way, was October of 08. However, different assets bottomed at different times. You recall, the S&P, for example, didn't bottom until March of 2009. I actually think the NASDAQ did bottom in December of 08 with copper, but you can see this trend line, and it became resistance throughout 2017, 18, and yeah, that was at 27, 18, and then we are right back into it now. So pretty big spot for copper up here, and if we break it, probably gonna get a pretty big drop. Excuse me. Need more coffee. End of the week. If we're probably going to get a bigger drop considering where we are coming from. Okay, that's what I was trying to say. All right. All righty. Do we have any questions? All right. I'm waiting for a second. I'm told that we have a little bit of a delay here in the stream, so I'm going to hold on tight. Really following this Aussie yen chart closely, by the way. Sergito, sorry, I didn't catch the beginning. Could you look at the 30-year yield daily chart? Absolutely, Sergito. So I love that you asked that question. You must have been paying attention the last couple of weeks because that is actually the chart that I led off, I believe, the last two webinars with. And on US 30-year bond yield. All right. So you'll recall, Sergito and others, that this chart to me was one of the most important with respect to the, I'm not even, I guess they call it reflation trade, but the inflation trade, right? This is the purest form of that. Right? What do the long bond yield? What is that? That's the inflation part, right? That's the part that academically, I guess, that the Fed does not necessarily control, but that's where, the long end of the curve is the inflation part. So that's what we're looking at here. And really, for the first time in several months this week, we have a drop in that yield. So, I mean, this is a huge level, right? I'm looking for us to come off a bit more here. Let's zoom in and let's see if we can kind of get, Sergito says 30-year yield. Yes, this is the 30-year yield right here. That's what we're looking at. You can see that we're trading at about 237. And we topped last week at, what was that? 251.6. So we have come off some. Nothing to write home about just yet, but yeah, that's where we are. And we're at huge resistance. So here's that 30-year yield, right? Sergito, 30-year yield, we bottomed back March of last year at 83 basis points. Okay. So yeah, when I see a chart like this, it tells me just where we've traded into, that we probably have some, at minimum, some back and fill, pullback, etc., to realize before we could make maybe another attempt at the upside. Coriolis asks, is it possible to import your trend line to my own chart in TradingView? Great analysis. Well, Coriolis, I will tell you. So you can draw it on your, I don't know if you can import, it's actually a good question. I don't know if you can import my drawings, if you will, onto your charts. One, thank you though for the compliment. But yeah, I don't know if that's possible. I'll actually ask TradingView if that's a possibility. However, I will show you where you can draw this. So just type in US30Y and you'll get 30-year yield, US government bond 30-year yield, and start back. So here's a weird thing too. Sometimes some of the data on TradingView, sometimes it goes back further, and then like maybe they get a new data vendor or something, and then you're missing some of the charts. So like I used to have 30-year bond yields that went way back, and now it only goes back to 87, but whatever. So just start by drawing a trend line from the 1987, October 87 high, and then off of the November 94 high. Okay, that's your first line here. And then go over here to the left pane. Okay, regular pitchfork. All right. Draw that in. And then you want that to say modified shift. Modified shift is just a channel. That's all you're getting with the midpoint. Now we're at the midpoint. You can see why the midpoint's important. Boom, boom, boom gap. Boom, boom, boom. Okay, so, and then what this area is here, I talked about this a couple weeks ago, but this is another pitchfork method. The distance between here and here is the same as the distance between, it's the width. We call that the channel extension, okay? The channel extension oftentimes will identify support or resistance for a channel or for the move, right? Once you break the channel. Well, we broke the channel and we bottomed on the channel extension back in March. So there's a quick and dirty on the 30-year bond yield. All right. Here's another question. I expect DXY to have reached resistance zone on the monthly chart. Do you agree? Well, I will on the monthly chart. Let's see here. Monthly chart. Here's a monthly chart of DXY. I would say that DXY reached support a couple months ago on the monthly chart. So here's a monthly chart. As for resistance on this, you know, if I'm looking across, just where does it stick out to me, so to speak, it's probably right there on a monthly chart, right? That's going to be, see that? 94.65-ish. So that's my thought process on where resistance would be for DXY on the monthly chart. Do we have any other questions? Okay, if we do not, then I just want to remind everybody that, you know, so the announcement I gave in the middle, you know, before we finish, just remember that we are looking for profitable traders at Scandinavian capital markets. So, you know, if you want to give it a go at managing money, we have clients all over the globe that are looking for strategies to invest in. You know, if things go well, you can fund your strategies with up to $2 million. So to register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. Okay. It looks like we did have another question come in here. Fickrat Trades asks, how about, let's see here. Asks, how about the trend line from bottom? I'm assuming that you're still referring to DXY. So let's go back there again. Without having a view of what you're looking at, Fickrat, I'm not certain as to what you're looking at. Is it maybe that? If that's what you're looking at, then your resistance would be a little, you know, maybe a little bit above where actually I was looking at the horizontal level. So, you know, we've got that. And then up here, which certainly would make some sense. You know, you'd have a nice zone there, right? If that's something that you're looking at, it could be anywhere within that zone. really. Okie doke. Alrighty. Well, if that's it for today, for the questions, then again, thank you very much. And don't forget the announcement about traders. Again, going to go to scandinavianmarkets.com/fundmytrades. And good luck. And I'll see you again here next week for the Forex Power Hour with Jamie Saettele. Alrighty, take care. Bye.